All right, awesome. So had a conversation earlier today that made me think that we need to have this conversation. And it may be immensely helpful. At least I hope it's immensely helpful. But we're going to deep dive on one product and just walk through building a plan. And I think I don't quite have updated numbers yet, but should have them by the time we get done. But let's look at, actually, let's see. I need to save this and get to great success. And then, so we're going to look at the plan of the Nasdaq and what and where was available given where we are. And we're in the middle of summer. We're limping our way toward OPEX, and we've got inflation tomorrow. We got CPI tomorrow, and we're in a range. So I mentioned that, like, the first thing that I look for is what's the posture of the auction. So let's just get rid of some, even more things here, and let's just collapse it down. And we can see that we have 20-day POC, 90-day, 5-day POC are just stacked on top of each other. So this is a market that is balanced, and there's only ever two behaviors in a market. There's balanced and there's imbalanced. Trending or consolidating is the deal. Now, depending on what time frame you're looking at, you may find that there's periods. So overall, in a larger time frame, we're in a range and we're sideways. If I go down to a small time frame, I find that there are all kinds of, here's a trend, here's some balance, this is a test, back into balance, here's a new move, shut off, balance. It's an exercise that you can do to find all of the balance and micro balances, because this all happens at small time frames. But in terms of, if I was an intraday swing trader, which is what I am, and I'm trying to build a plan for the next day with the objective being of where could I find 25% of the range. So if the Nasdaq is expecting 1,000 points, or where can I find 250 points? Because is it reasonable to think that I could get 1,000 points? Probably not. Is it reasonable to think that I could get 25% of that, or 250 points, if that's what's available? It also helps with what I find traders that are developing, they go, well, I want to make this much today or each day, because they think that you should be able to get this much out of the market every day. That ultimately will fail you. And the reason that will fail you is because markets are not always the same width. So as we go through the different cycles, some days the market's going to be 1,000 points. Some days it's going to be 400 points. What is an A plus, or whether you hit your budget, is whatever adjusted to the opportunity that was available. So if you're like, I want to make $1,000, so I need 50 points. Well, what if the whole market was only 50 points that day? Right, wanting your $1,000 on the cues, that may be really challenging. But if it's 1,000 points wide, way more easy to do, right? Way more realistic to achieve. So I find it helpful to think in terms of what's the expected range, and then my objective is where can I find 25% out of that. It just helps right size everything to whatever market regime that I'm in. So if we go into the summer and things start to slow down and ranges get tighter, I have smaller expectations. When we get into the fall and things start to unwind and get crazy, I can widen my expectations around that. So I'm adapting to what the market presents and going from there. So here I've got balance on all these time frames. So I'm looking for a move. I'm expecting that there's going to be a larger catalytic move out of these prices, out of this range. What's hidden in the other chart is these profiles, right? So we're just stuck. We're balanced. And the key takeaway is that moves begin from balance. So this is the spot that there will be a move. If I imagine, where will this move ultimately take us? It's either going to take us to new all-time highs, or it's going to take us to a revisit of the recent lows. But there is going to be a move from here, and it's going to be large. When is it going to take place? I don't know. Likely driven by some kind of catalyst. A catalyst could be a planned catalyst. We have CPI, or we have PPI, or it could, OPEX. It could be a non-planned catalyst. It could be war. It could be some financial crisis. But regardless of what the catalyst is, we're at equilibrium now, and we're waiting for that thing that's going to take us away from here. It could be an earnings report on a key player, right? We have NVIDIA coming up, I think, in a couple weeks. It could be that. Anyway, so we're balanced. So then we're building our plan. All right, let's start layering things in. It ultimately informs, first, what was the expectation? When we're balanced and we know that outside of a larger catalyst, we're going to be stuck in this range that also tempers like what we're looking for. So when you're at balance, you're looking for tests of the range. And then the question is what happens out here? If there's a lot of velocity that gets us out here and then we don't kick this way and then continue or accept out there, you want to go with that. You do not want to fade that. And this trips traders up all the time because they think, look how far it's moved, I should fade it. And you will get run over. When the real tempo comes in and the move happens, you're going to get run over. So it's situational awareness, it's ironic, of where we are is really insightful for how we play this. But currently, knowing that we had CPI, unlikely we're going to see a big move. So what was the plan today as we came in? Let's look at our profiles and look and see what was out there and likely. And then let's also layer in to know where weekly highs. So here's our current weekly low. We're inside of last week's range. We were looking for moves from here toward here or here. We had an open drive lower. We had an IB low extension that led to this price. Now, the door was open that we could have also pushed significantly lower, but overall, the idea was if we're below, then we're looking down to 525. If we got below 525, we can make a run for 200. We paused at 525 and sucked it back in. So overall, played as expected. Now, let's talk about a plan for tomorrow. So tomorrow we have a catalyst. We have CPI. So let me, actually, you know what? This is not updated because the model, let me refresh this. It's just updated prices. So now we can have new information. Great, awesome. So here's where we're looking below to 29,525. Where we're looking for moves away, right? So awesome. We had an open drive, open from positive value, IB low extension, push to the naked VPOC. IB go with was offered. It was a little chunky because there was some gamma prices right here near the breakdown. So that made it a little chundry. But once we got below those, there was some clear opportunity to be short and go for that. Now, going into tomorrow, we have CPI. So catalysts will either accelerate structure or they will meaningfully change it. What do I mean by accelerate structure? So given where we are, we're 2 days into the week. We're inside of last week's range. Let's go look at last week's profile. So that the move that took us up into this area, to this balance, is imbalanced to the upside. So unless we accept below last week's mid and start trailing this way, the path of least resistance is higher. So even though we had like move lower this week, but still above this low, and it would take nothing for us to trade back to the middle. And if we trade back to the middle, that's setting the stage for us to move higher. So tomorrow, with this catalyst, the expectation is still, where are we relative to the 5-day, right? So 29,800. So 2800 is key. If we're above it, post CPI, post open, we should see a meaningful move toward new weekly highs. If we're below 800, if we accept below 535, we should see a meaningful move at least to 200, if not significantly lower, because we're now at balance and we're going to get a catalyst. Now, if we did not have a catalyst, if it was just any plain Jane day, in terms of setting plan or the three scenarios that I have here, what if I open in range? What if I open in direction of bias? And what if I open in violation of bias? So how do I set a bias for what I'm looking for the next day? That's all set based on how today finished relative to the prior day. And there's a number of components that feed into this to help us set that. The first one is just where was the close, right? So here was the close, there was the prior close. We closed lower. That's a check for the sellers, right? Let's look at the point of control. Here, it's lower, point for the sellers. We closed below the session VWAP, point for the sellers. We closed away from composite. That's a point for our sellers. So who went home with control today? Sellers. If they are to retain that control in the next day, what should or should not happen that would affirm that the control that was established today continues into tomorrow? Well, where am I relative to the first reference of value, which is today's point of control? So if I open inside of this range, unless I get above here, I'm looking for new RTH lows and push lower. Let's fold in the ranges here so we get an idea of what the expected ranges look like, right? So very reasonable we push towards 362 or towards the gap at 200. So let's record that. So here we are. CPI before the open, mark the scene of the crime, and anchor in a VWAP to the scene of the crime, as well as the 30-second range of CPI. So these are all references that I look at that help aid bias. We already have a bearish bias, but that's going to be trumped by whatever happens with CPI. Now, it may be affirmed and it may be negated, right? So if we are above 29,800 post CPI, post the open, then the door is open to push towards new weekly highs. But if we are below 29,800 after the open, watch for acceleration below the point of control at 640 to push toward new RTH low prices, aiming for 29,350 or 29,200. So we're looking for that move lower. If it could either be higher or lower, either way. So if we're above that, we're looking up here. If we're down here. So if I open inside, right, I'm leaning on the CPI VWAP and tempo below 29,800 to join sellers for new RTH low prices toward the destination. Now it could be that we gap, and the gap would be that we open here, all right? And that's gapping in the direction of the bias. So if I gap in that direction, if we cannot get back inside of this range, we've got FOMC VWAP down there, and we could go close the gap. It could get fugly. When you're balanced and you introduce a catalyst, it has the potential to make it nasty. And people who have gotten used to the last couple of days or even the last week of, oh, it's only going to move this much, and then now all of a sudden it's moving 150 to 200 points in a 5-minute period, they'll get run over. So part of the plan is to be adaptable to that. So if we open with the gap and it holds, we're looking for 29,300 and lower toward a gap back to 29,000. If the gap fails, right, we open with the gap and immediately in the bottom of the range here buys us back up. Where are we going to go? We're going to go back to this point of control, probably back to the middle. So if the gap fails, it's back to 640, 29,800. If we open in violation of bias, that means that we are opening up here. Lean on the CPI, scene of the crime, and other references. And if above those, look for buyers to join toward new weekly highs. It could be that we actually push for new all-time highs. So potential to push for new all-time highs at 30,600. So now we have a plan. Right? Now we're ready to go relative to whatever it throws at us. And then we just got to do is wake up and see which one it is. But the consistency is, first, I have to discern who has control of the auction. If that control is maintained, what is the expectation? If that control is challenged, what is the expectation? It also requires that I have to know at what price would that control be challenged. To the degree that's subjective. But there's also structural references that can be certainly helpful. Why am I picking above 800? Because that means I have to get back above composite value. When you have a build out in the profile, how do we get a build out like that? It's because I have buyers and sellers that are there. When we see a move away from there, the scale has been tipped to one side or the other. So that means if we're moving away from it lower, the tip went to the sellers. But if I go back through that, now those sellers were too weak to hold it down. It's increasing the probability we go the other way because we just broadcast the market. It's unlikely to be able to go lower, increases confidence to go higher around that reference. And it's not just they went higher, now they're going to go lower. It's literally there was inventory here. That's what this profile is. And that means that I reach a point where somebody who was short is now going to cover because it didn't work. So there's a mechanical component around that. And we'll certainly have to layer in and see where the options GEX prices are in this whole thing. But overall, that is the plan. So now we have a plan for the Nasdaq. Let's see if there's any specific prices that I want to carry out. We do have a naked weekly point of control up here at 175. We do have a naked point of control here at 800. 29525. That one's been closed. 29250. That has been closed. Awesome. All right. We'll do one more here. Just looking at gold, because it gives us an opportunity to look at a different posture of where we're at. All right. So here, 5-day is here, 20 and 30-day are down here. So we've had a move, and we've now balanced enough to accept these higher prices. That means now that 4,400 is pretty key to this market, as evidenced, right? There's the 5-day, right, at 4,400. Today, the idea is that we had a potential for a third period reversal back. It didn't give us the third period reversal, but it gave us an IB go with short or on a pullback to get to, and it stopped. Like I would have expected to go here. It did not go all the way there. Why did it not get all the way down to the 5-day? Because there was something in the way. What was the thing that was in the way? It was the weekly VWAP and the trailing VWAP from non-farm payrolls. Right. So outside of those two references, we would have gone back to 4,400 most likely. But we found participants that held that. We did tag the point of control from the prior day, so that was good. Overlapping higher. Now here's, as we look at the bias of this one, it's a neutral extreme lower day. So we did take out IB high and IB low and a couple passes on that, but closed outside of it. So that is a bearish control on the day. We closed again below the session VWAP, but yet the point of control is higher, right? So point of control is higher, so value is higher, but the close was lower. We're below the VWAP. We're at weekly VWAP. It's kind of neutral. So we have confluence of control. This could go either way. And it's going to largely depend on where we are relative to a couple key references. Right? So if we did not have a catalyst, what would I look for potentially? Is that if we open inside the range, unless we're above this VWAP, if we get below the weekly VWAP, we're going to look for a test here, could push past here. We could see a response off of the 5-day that could rotate us back up and keep developing at this node. If we're above the high, very possible that we go get these untested Globex highs. So that happened overnight. Actually, we didn't get the overnight stat complete. We didn't get the high or the low. So that is likely going to be tested in the next session. But what's the plan? We got CPI pre-market. CPI is going to impact gold. We had a rotational backfill day, right? So this was impulsive and there was holes. We effectively backfilled that. Watch this. See that? See how much better that profile looks than the other 2 days? So we backfilled the auction. All good. All right, so if we're below 44.50, likely we're going to touch 4,400. We'll see if we get a reaction there. So it's really fielder's choice between 4,400 and 44.50. Below weekly VWAP, 4,400 looks like the likely test. And if we're accepting below that, we could push all the way to the other side towards 43.70. If we're above 44.50, then we have an open path toward the untested overnight highs toward 4,500. Right? If we open in range, so if we open inside of this range, we'll see where we are relative to CPI. But if we see acceleration below 44.40, we'll look for new RTH lows to 4,400, and then we'll see if that introduces a composite reversal. If we were to gap lower, likely going to see 4,400 and lower. Again, leaning on where we are relative to CPI references. And if we are unable to hold below 4,400, likely we return back toward 44.30, 44.45. If we're above 44.60 and above scene of the crime and all the references for CPI, then the door is open to look for strength to join either via directional open, IB extension higher, to go to get 4,500. We now have 44.95 adjusted Globex. So very doable, right? Our expected high, even from where we were, is to get up there. The expected low, 43.89. That can take us to the bottom of this range. Now, I should probably highlight that if we can get below 43.75, then the door is open to go back to 43.22, just to be prepared for it. So if we accept below 43.70, increased probability that we push into the gap back towards 43.25. And now we're good to go. All right. However you do your planning process, certainly I would offer, this is a way to do it consistently every day, and it fits within the time frame of somebody who wants to do intraday swing trading. Probably not effective to somebody who's going to be a scalper. They really don't need all of these references. If you were doing this amount of homework for scalping, you're doing way too much work for too little return. This is really to help us figure out how can I get 25% or more of the effective range. And to that end, let's just separate these views out, because I've now added in here where you can see what's the P&L based on the expected range and what would 25% yield on a one contract basis. If you look at that as a micro, you can look at it this way. But that gives you an idea of what's on a micro. So if I'm trading the Nasdaq and I should at least see, if I was trading micros, I should at least see $200. That's very reasonable to see. That's a one lot, right? If you're trading three, you should be like, man, I should do $500. If I was just getting 25% of the range, there is 25% of the range that is likely available somewhere to find. That's setting my expectations realistic relative to what is outside of me. And given that we have a catalyst, it could be even wider. And to that point here where it's green, that means that the implied volatility has expanded. So we're actually expecting wider ranges tomorrow as priced by the options. So if you see this green, that means we're expecting a wider range than we had yesterday. If it's red, we're expecting a tighter range than we had prior. So it's a leading view into how to approach that. There you go. May your inflation always be transitory. May you find a cure for high prices, unless you want high prices, and then it's all good.